Today, we're going to tackle one of the biggest myths in real estate valuation, especially out here in California. We're talking about why the industry's go-to metric, price per square foot, just completely falls apart once you cross that $1 million mark. Let's break down exactly why. So get this. Picture two homes in beautiful Del Mar, right? On paper, they look like identical twins. Same square footage, same number of bedrooms and baths, same lot size. But one sells for a cool $1.4 million, and the other? $980,000. That's a massive difference, over 400 grand. A standard price per square foot analysis would have priced them within maybe 10% of each other. So what gives? The answer is actually pretty simple, but it has huge implications. One home has an incredible unobstructed ocean view, and the other one doesn't. And that one single factor just blows the entire traditional pricing model right out of the water. This right here is the core challenge of pricing luxury real estate. And that really brings us to the main question we're unpacking today. Why does this metric, which, works pretty well for most of the market, become so unreliable, I'd even say dangerous, when you're pricing high-end properties? Let's just call it the $1 million glitch. It's that point where all the standard math just breaks down. And trust me, understanding this glitch is the absolute key to pricing luxury homes correctly. This slide really lays it all out. It shows the fundamental difference in what actually drives value. See, below $1 million, value is mostly about things you can count: square footage, number of rooms, and what similar homes nearby recently sold for. But in the luxury space, the script flips entirely. Now we're talking about things you can't easily quantify: the quality of the view, the level of privacy, the story or provenance of the home, and just its sheer uniqueness. You can't plug those into a simple formula. And hey, this isn't just a theory. Let's look at the actual data from La Jolla. Within the very same zip code, the price per square foot for homes over $1 million varies by a whopping 45%. Think about that. That's not a margin of error. That's a completely broken metric. It's telling you that for any given size, the price is all over the map because it's being driven by those other, more important factors. So what's the real-world consequence of getting the price wrong? This chart shows it in pretty stark terms. In San Diego, a home under $1 million sits on the market for about 38 days, but a luxury property, 127 days. That is more than 3 times as long, and a huge reason for that is starting with the wrong price based on flawed metrics, which then leads to painful price reductions and a listing that just goes stale. Okay, let's really focus on the most dramatic example of these intangible assets, the place where spreadsheets and algorithms truly struggle: the view. Let's circle back to our opening story from Del Mar. Seeing it laid out on a chart like this, it really drives the point home, doesn't it? It's the same house, just a different outlook, and that creates a $420,000 difference in value. The view is the value. It's not just a feature, it's the core asset. And this is not a one-off thing. All across coastal San Diego, from Encinitas to Solana Beach and La Jolla, we see this consistent view premium of 20 to 40%. That's a huge chunk of value that has absolutely nothing to do with how big the house is. All right, next up is what we call the provenance premium. This is where we get into the idea that you're not just selling a house, you're selling a piece of art. So what exactly is provenance? Well, it's the story and the pedigree behind the home. Was it designed by a famous mid-century modern architect in La Jolla? Does it have a design history that basically makes it a collectible? At that point, it's not just a house, it's a piece of history, and that has a value all its own. Now, pricing this is tricky. The pool of buyers who will actually pay a premium for a specific architect's work is smaller, but they are incredibly motivated. You just can't find a comp for a one-of-a-kind design. The value here doesn't live in a spreadsheet. It lives in the story you tell. It has to be argued and justified through an expert narrative, not just by looking at raw data. Now, let's switch gears from what adds value to a really common trap that can actually destroy it. This is an expensive mistake we see all the time in luxury markets like Rancho Santa Fe, and I call it the custom finish trap. So imagine this scenario. A seller in Rancho Santa Fe pours $600,000 into the most exquisite hand-painted Italian tile and custom imported fixtures. The craftsmanship is amazing, no doubt about it. But the style is incredibly specific to their personal taste. Here's the hard truth of what usually happens. The seller might only get back 30 to 50% of that investment. And why? Because the broader market probably doesn't share their exact same taste. What the seller sees as a priceless upgrade, a potential buyer might just see as a big renovation project they have to tackle down the line. So, if the old model is broken, what's the solution? Well, it's about a completely new framework, building the price piece by piece, exactly how a luxury buyer thinks about it. Here's the new approach. We call it component valuation. Step 1, you establish a baseline value just for the lot and the structure. Step 2, you start layering on those quantifiable premiums, like the view. Third, you factor in the really unique assets, like architectural provenance. And finally, you adjust for finishes, but based on what the market actually values, not what the seller spent. And that brings us to the final and maybe the most crucial component in this whole thing. In this new framework, the data is not enough. The key ingredient is your expertise. And we've got the data to prove it. Luxury listings that go beyond the numbers, the ones that include detailed agent commentary explaining the value of the view, the story of the architect, the quality of the location, they sell 22% faster. Your analysis is literally the bridge between the raw data and the right price. So what's the big takeaway here? First, price per square foot is just one tool in your toolbox, and in the luxury market, it's often the wrong one to lead with. Second, you have to remember that the true value lies in the story, the uniqueness, and all those intangible qualities of a property. And most importantly, your expert analysis is what makes sense of it all. And ultimately, that's the bottom line. You should stop looking for tools that try to replace your judgment. The very best tools don't replace your expertise, they amplify it. That philosophy is exactly why we built CMA Flow. It's designed to help you build that component-based argument. It gives you the space to tell the story behind the data, to explain the view, the architecture, and all the nuances that standard comms always miss. It's built to empower your expertise. Thanks for watching.